What a crazy week we have had in the housing market. We're going to get into this right now with the big three prices. Prices are up still. Inventory is up and up across the country. And rates, they're really green. They're like luck of the Irish green. They are down this week, and we'll get into why. There's a lot of reasons. Headline news, Jobs Week really wasn't that great. But you know what? The positive jobs news did not really cause rates to go up because we had all this tariff news. And we'll talk about the tariff impact, the Trump tariff impact on rates today. And then the big question now is, are we in a recession? And will the housing market crash in a recession? And you know, you hear a lot of people who are saying, oh, the housing market's going to crash, the housing market's going to crash. Well, we're going to talk about that. And I can pretty much guarantee you that that is not going to happen. And then finally, you know what? Save the best for last. The bottom line, mortgage rates hit their low for 2025 and lowest since October. So we'll get into that here in just a minute. Before I get into all the reports, though, please like, comment, subscribe. Your comments, I love responding to them. There's some really good ones. There's some really bad ones, but I just delete those. All right, I'm kidding. If they're legit, I keep them. All right, so let's talk about the first report that came out. This one was on the 2nd. It was the ADP employment report. And we had a really bad report last month. Good for rates, bad for new jobs. Well, guess what? This was a rebound month, all right? March report showed private sector jobs, 155,000 new jobs versus 105,000 expected. And there were job gains across all company sizes. But the good thing for inflation was pay increases, wage growth was down, both people who are staying in jobs and people who are leaving their jobs. And they're getting actually a little closer together, which shows that there aren't as many reasons for somebody to leave a job to go to another one because of really the increase in pay. And we were seeing some large increases in pay. Those aren't there anymore. But what this shows is that overall, the economy is still strong. The private sector is still strong if we are adding this many jobs to the market. Again, this was more than what was expected. We also had on the day before, on April Fool's Day, we had the JOLTS Report, the Job Opening Labor Turnover Survey. That came out, and actually that fell from 7.7 million jobs on the market or open or available to 7.5. Not a big change, but still something to note. The contrast to this news, though, would be same day the Atlanta Fed came out and lowered their GDP, their gross domestic product output or forecast for the first quarter of 2025, which we just finished. They lowered it from 0.37, or actually minus 3.7 from minus 2.8, which shows Atlanta Fed is concerned with inflation. They're concerned with tariffs. And this was before the Liberation Day report from President Trump came out later in the afternoon. Let's get into the report that came out on Friday, and the reason you're getting this report here today a little late, and that was the BLS, the Bureau of Labor Statistics Jobs Report. It showed, much like the ADP, a big increase in new jobs added to the market. Above expectations, 228,000 new jobs versus 135,000 that was expected. For January, February, there was a minus 48,000 revision, but still overall, signs show a positive labor market. Average hourly earnings, though, they did drop, same as in the ADP Jobs Report. And it's kind of interesting, all of the job gains were in that 20 to 24, not all of them, but a majority of the job gains were in the 20 to 24-year-old age range. So unemployment. All right, here's a big one. All right, unemployment was up. All right, we need unemployment to go up. I think that is a huge trigger, and the Fed is looking at inflation, and they're looking at unemployment. And you would think, oh my gosh, we went from 4.1 to 4.2. This is the highest level of unemployment since November. When November we hit 4.2, but guess what the numbers were? We went from like a 4.14 to a 4.152 unemployment rate, and they round up, so that became 4.2%. So really not much change in unemployment. And again, this is what the Fed is looking at. And people are saying, oh my gosh, this unemployment rate, it needs to go up to 4.3 or 4.4. It needs to go higher than that, folks. Let's look at this one graph. You can see unemployment, and I really, just go look unemployment prior to 2020. You can see we were in the high threes and low fours even then. We shot up right after COVID. Huge increase, but look at that. We dropped right after, and we have been right around the same rate, around 4.1 or below 4.1% for much of the last 3 years. So the job market, the labor market is not breaking, which shows that we are not heading into a recession. But that's what a lot of people are talking about. Nobody likes change, and nobody, the bad news, the sky's falling. But our labor market is strong. Just look at this. I think we need unemployment to go up to 5% before the Fed really starts to take action on lowering the Fed funds rate. But really, the jobs report, not good for interest rates. But again, the jobs report didn't drive rates this week. Let's talk about the Trump tariff effect. All right, right now economists are concerned, politicians are concerned about the impact, and you're hearing some chirping. And who's to say they're right? Who's to say they're wrong? Investors are kind of freaking out. The stock market's lost about $2 trillion in value over the course of the last 2 days alone. But it's important to remember that 93% of investments into the stock market are made by about 8% of Americans. So really, the people who are getting hammered right now are the people who have money. This is going to affect them, but it's not really going to affect them that much. This impact is not necessarily on the rank and file. This is on really the rich people who have a lot of money already in the market. The immediate impact, but the long-term impact for Americans, I think it could be a really good one. We'll get into that maybe in another video, but right now, what is the Trump effect? Are we going into a recession? All right, well, let's look at that, because is it going into a recession bad for the housing market? Remember, President Trump has been concerned about mortgage rates, and he's been talking about the 10-year Treasury coming down. He's been talking about mortgage rates coming down. That's been one of his big stomping, one of his big, foot-pounding things that he wants to happen. Secretary of Treasury's talking about it, is he wants mortgage rates down. Well, what happens when mortgage rates go down? The housing market picks up. If you look at this graph here, every time that we have had a recession, with the exception of 2008, in a recession that was caused by the housing market, you see that value of homes goes up. And after one of the main reasons why the value of homes went down so much, 2008, 2009, is because we had so much supply and not enough demand. We had unemployment at 10%. All right, so we had all this supply. We didn't have people who could afford to buy because they had lost their jobs. Unemployment was high. Builders have learned from that. We are at such a low amount of supply across the country that the fear of that happening again, it's non-existent. They're not going to overbuild. They can't overbuild because of the cost of supply. But let's take a look. What are some of the pros for a recession? All right, really, it's all short term. All right, it's the smoke that hasn't settled yet. It is the stock market losing $2 trillion of value. And then it is the thoughts or the fears of a trade war with no end. And that's, we see this, we don't know yet, but these are all assumptions of what's going to happen. But here are some cons for a recession. One, oil prices. Oil prices have dropped to the lowest since, I believe, like 2021 maybe. And guess what impacts inflation more than just about anything else? It's the cost of oil, the cost of gas, right? We need oil for just about everything we do, whether it's flying an airplane or building a car or heating a house. So the impact of oil prices is going to be positive for helping to keep inflation lower. Canadian lumber, all right? Builders need lumber to build. We get our lumber from Canada. Well, guess what? President Trump has not put tariffs on Canadian lumber, so that's a good thing. And then unemployment. I just talked about unemployment is still very, very low. We haven't seen it go up, skyrocket, and we probably won't see unemployment skyrocket. But again, a lot of the pros for a recession, the short-term smoke, we need to let the dust settle on that. So nobody likes change, and that's kind of what we're dealing with right now with the Trump tariffs. And again, let the smoke settle. We'll get on there. But I will tell you this, it's kind of funny. We went 2 weeks ago, the Fed futures were saying that the Fed was going to lower the Fed funds rate twice this year. Now they're saying 5 times this year. So we'll see. Let's remember the Fed mandate. It's controlling inflation. Inflation is, while not as low as they want, it's still pretty low. And unemployment. I don't think anything is going to happen with unemployment to make them move unless we get to 5%. They may freak out at 4.5 or 4.6, but really 5%. And inflation, we got a big inflation report next week. So this drop in rates, we may see rates go back up next week if we get some inflation reports that show inflation going up. So let's get into, should I buy or should I rent? If this chart here doesn't change your mind about the value of buying versus renting, you know what? You don't want to own a home. And you pretty much are committing yourself to a life of living paycheck to paycheck and working until you die. I know so many Americans are like that because they have never been educated on the value of home ownership and really the difference between the net worth of people who rent versus the people who own real estate. Look at the difference here. And that difference is not getting smaller. 43 times more net worth for people who own homes versus people who rent. And people who rent, they are living paycheck to paycheck. The average net worth of a renter is $10,000. The average net worth of a homeowner is $430,000. Wow, that's a huge difference. And there are people who are saying, I am going to wait for the rates to come down before I buy. Well, let me tell you, you need to pay attention to the next video I come out with because it's going to be talking about the people who are waiting for the rates to come down and how much money they're going to save by waiting. Because you know what? That is the biggest myth of all. All right, and we'll get into that. But this is a big chart here, guys. Stay tuned to my next video where I talk about the value of home ownership and the value of time in the market, not timing the market. The other things that this chart show, your first home is not going to be your forever home in most cases. The people who have bought their first home, a lot of them kept it or they sold it and used the proceeds to buy that second home. And in the higher rates right now, short-term pain, long-term gain. You're going to pay a little more in the beginning, but you know what? Over time, you're going to pay less, all right? Especially as you refinance. But what's going to happen for renters? All right, renters, that rent is going to go up. It's going to keep going up. I know as a landlord, I raise the rent every time I get a new tenant. It's not because I'm a mean guy. It's just because I'm going with where the market is and what the market dictates. But don't forget, stay tuned. Next video talking about should I wait for rates to come down? That's going to be a really good one. All right, VA rates. Last week I said if we had a great jobs week, interest rates would go down. I was wrong. All right, we had a bad jobs week, in my opinion. Again, new jobs were up for both ADP and for BLS, and the unemployment rate really didn't go up much. It went from 4.1 to 4.2, but it really was like maybe a tenth difference, not quite as much, not even a tenth, 100 points difference. But the rates went down because of the stock market getting hammered. All right, I'm not talking drunk hammered, I'm talking just beat down hammered. All right, they went from just under 6.25 down to right below 6% on VA at the end of the week. And as I talk to you about this, I think the dust is beginning to settle, and you can see interest rates are starting to go up. I actually saw at least one alert to lock before jumping on and making this video. So how long is this going to go? All right. Again, we always, with the markets, you always see the overreaction, and then you see the reaction to the overreaction. I think that's where we're at right now. Next week is going to be our first look at inflation. And will interest rates stay below or right at 6%, or will they pop back up to the 6.25? I really think that it's going to be dependent on that CPI, the Consumer Price Index, which comes out next week, followed by the PPI, the Producer Price Index. Those two reports will dictate whether or not rates move down to the 5.75% or go back up towards the 6.25. So a big week of movement for interest rates, in particular for VA rates under 6%. That's good news. So what does this mean? Well, if you're a buyer, hey, mortgage apps were up again this last week, but not that much, 2% week over week and 9% year over year. Refinance applications were down, actually. I'm guessing that there's going to be a lot more in the week ahead or in next week's report with the interest rates dropping as much as they did. Again, next week is inflation week, and I know a lot of people are waiting for rates to come down, but you know what? Maybe they go back up and then you miss out, especially for the refinancers. So, and the other thing to know, a lot of the refinancers aren't just doing a rate and term refinance, they're doing cash out refinances because their debt is so stinking high. So, that might be something to look at. If you are living paycheck to paycheck again and your credit cards are maxed out, you got student loans that you now have to pay, you know what? You might want to talk to your lender and see if refinancing up into a higher rate from, say, the 3s to the 5s is a better idea and will lower your overall blended rate that you're paying month over month with all of your debt. For sellers, hey, April this is the time to put your house on the market. It's going to get crazy hot, especially if rates stay in below 6% for VA. You're going to see a lot of people. We're getting ready to move. So if you haven't put your house on the market, the time to put your house on the market is now. That's all I got for you this week. Have a great week. Talk to you later. Aloha.